It's time for the latest look at what the major developments and events are that are likely to dominate for currency traders in the week ahead. Europe is likely to once again be the focus, with Moody's on Monday saying that the sovereign debt credit rating of all the region's countries are under threat. German CPI figures are out along with the EU harmonised rate, but there are also important consumer confidence, Fed releases and employment data from the USA. And in the UK, the Chancellor will make his autumn statement on the economy there. Joining me today is Joshua Raymond, Associate Director and Chief Market Strategist at City Index in London. Welcome to Dukascopy TV, Josh. What do you think are likely to be the big events and developments, and what should currency traders be watching out for in particular?
So, in fact, there's actually quite a lot of data out next week. Obviously, it's the first Friday of a new month as well, because it's December the 2nd on the Friday. So that means the headline really for next week will be about the employment situation in the US. So that's obviously non-farm payrolls, private payrolls, and the US unemployment rate. So whilst we'll get better predictions and expectations from the market and from market investors throughout next week, we could see a bit of a better number. But in fact, it's actually going to be quite an interesting one, because last time around, whilst there was a disappointing headline figure, it was actually the revisions, which was a huge jump in the revisions, that actually took the market focused and pushed both stocks but also some of the currency movements higher afterwards. And actually, it's kind of giving you a decent example there to actually pay attention, not just to the headline, but also to any significant revisions as well. So there'll be a dual focus effectively on the payrolls figures that we see next week. Other than that, also, we do have some inflationary data, of course, out particularly from the Eurozone as well, so that may help us to gauge a little bit more of the appetite that Mario Draghi might have for an interest rate cut sooner rather than later. It seems like he's gone more down the interest rate cut path than obviously his predecessor Jean-Claude Trichet, who the market wasn't very happy with.
US consumer confidence and the Fed beige book on the economy are both out. Are they likely to say anything we don't already know, and will they form some part of a shift of focus from Europe to the USA?
I think the headline will always be on Europe, to be perfectly honest with you. Obviously, you had the sort of the deadlock essentially in the super committee in the US about coming up with a bipartisan agreement. They had 3 months to do it, and they haven't done it. And it's no real surprise, because it's the political sort of tomfoolery that's sort of scuppering any bipartisan deal on that front. But the US is obviously a focus, because it's such a huge marketplace, and because of the crosses between the dollar effectively and a number of other forex pairs. So the headline will be Europe, but of course, naturally, we'll always keep an eye on what's happening in the US. And you're right, there's a significant amount of data that's out from the US next week to keep an eye on. Consumer confidence, for instance, we're expecting a bit of a bounce back in consumer confidence because of the sharp drop that we saw last time around. I think it fell off to about 39, or just on the 40, 39 spot 8, I think. So it's expecting to bounce back to 43, and obviously we had Michigan consumer confidence was a little bit better as well. So we can take that as maybe an indication that the confidence number could actually bounce back slightly. Beige book, again, obviously you're looking at the Fed districts and the progress made there. So again, you can look for that as a bit of an outlook on the FOMC and what Bernanke may do in the future. I'm one of these people that doesn't really pay too much attention to the beige book lately, because we do get a decent amount of rhetoric out in the interim periods between an FOMC decision anyway.
Finally, over in the UK, the Chancellor has an important statement to make on Tuesday. What are the big issues around this, and what are you expecting?
Yeah, it's the autumn statement. So from the Chancellor, George Osborne, it's the last big sort of statement that he has a chance to make before the Christmas period. So, the market will, and particularly, obviously consumers and retailers here in the UK will be focusing on what he's going to announce that might encourage a bit more consumer spending over the Christmas period, which is always normally high anyway. But again, there'll be significant doubts going into this Christmas period, which could be slightly more difficult than the last couple of years, for instance. Probably the main thing for forex traders to focus on will be the latest growth forecast, which should be coming from the Office of Budget Responsibility. So they will announce some new growth forecasts, and obviously we've had some new ones anyway from Mervyn King. But again, that could help to dictate a few moves in the pound sterling on the back of that autumn statement. So that's probably the main thing to keep an eye out for if I was a forex trader at the moment.
Thanks for that, Josh. As always, stay tuned to Dukascopy TV all week for the latest on all these stories and more, as well as plenty of exclusive interviews. Goodbye.